Welcome back, everybody. Earnings just out from retailer Target, and the numbers are significantly better than anticipated. Adjusted quarterly profit came in at $3.03 a share. That compares to the $2.83 that the street was expecting. So that's a beat by 20 cents. Revenue also above forecast as well. And then you have comparable store sales up by 12.7%. That is better than expected. The street had been looking, I think, for 8.2% of an increase. And by the way, that comes on same-store sales growth or comparable sales growth of 21% a year ago. So you're talking about growth on top of growth. If you're looking at the same-store sales, that comp is up by 9.7%, and then digital sales up by 29%. So some incredibly strong numbers that you're running through. Let me tell you about a few of the other metrics here. It looks like third quarter operating margin was 7.8%. That's compared to 8.5% a year ago. So a little bit of pressure on that. But if you look through some of the other metrics as well, sorry, just reading through the release, looks like the company is also raising its guidance for the fourth quarter when it comes to its comparable sales. Looks like now the company is saying that they are anticipating high single-digit to low double-digit comps for the fourth quarter versus before they'd been saying high single-digit. So it looks like they're seeing some strength that must be at the beginning of the fourth quarter with what they're seeing so far. The company paid dividends of $440 million in the third quarter compared with $340 million that they paid last year. So that's an increase of 32.4%. And they repurchased $2.2 billion worth of shares in the third quarter. We will continue to keep an eye on this. It looks like right now the stock is off by about 1.8%. Remember, yesterday we heard from Walmart that had better than anticipated numbers. That stock was down by about 2.5% by the end of the day. Yesterday, Target shares were up by better than 1.1%. We'll continue to keep an eye on this. Right now, down by about 2.5%. Strong numbers across the board. The only thing I would say is the operating margin, 7.8% versus 8.5%. And a lot of people have been watching for any of these retailers to show some sign of pressure on their margins as costs go up across the board. Inflation is a situation everyone's dealing with. And the question is, how much can you push back to your suppliers? How much can you pass on to the consumer? And then how much do you have to eat yourself? Again, though, stronger than anticipated numbers across the board.